Good morning, everyone. Once again, this is Black Forex coming to you with another pre-market analysis video just before the New York session. And this morning, we're going to be looking at USDCHF. We're going to be looking at USDCHF. Before we get started on breaking down this particular Forex pair, we have to state that this video is for educational purposes only. This is not for financial advice. But like I've said on previous videos, I have no doubt that you did come to YouTube not to learn anything about how to make your finances better. So with that being said, let's see if we can provide good trading content that can help you improve them. All right, so we're going to be looking at the USDCHF on our 4 hour. This is why we do it on a 4 hour because it gives us a nice, good, broad understanding of how the overall market structure is. Because, like I said, you look at it in the 15 minutes, looks very busy. Look on a 5 minutes, it almost look like you got full-fledged trends going, which you do. I mean, you really do. Don't get it twisted. This is a trend. You know what I mean? You got your let's see, your low, then your low high. So this is a trend, but you want to get a good idea of what's going on. So we look at an hour. Oh, that's the day. Don't go that broad. Okay, so we're looking at our 4 hour. And basically, this has almost been the accumulation of what's been going on towards the latter part of last week, going into the beginning of this week. We've been in a dead bounce around between 0.9223 and 0.9259, with occasional breaks of the 0.9259 getting up to 0.92800, this area here. Okay. Now, one would say that this looks very indecisive from a technical analysis standpoint. It does. But one thing about understanding fundamentals is that fundamentals gives you context to exactly what you're looking at. And understanding the fundamentals is like you've heard me say in previous videos. Currently, right now, the USD is weak due to the inflation affecting the American economy. Right? But on the other hand, CHF is relatively stronger than USD. So this is why this is a little weird because with this currency being technically stronger and the USD being much one of the weaker currencies at this time, you would suspect the chart to start to go down. But just like anything, just because we suspect it does not mean it's going to happen. We got to wait for the behavior of the market or the breadcrumbs of the market to lead us to which way we're going to go, which is the buy or the sell. So let's see if we could find a little bit of breadcrumbs. And I already see some. What I see is a lot of turnaround in this area. Every time we get up here, we shoot down. Every time we get up here, we shoot down. Now, why is that? Last time we got here, we did come down. Last time we got to this area, right here, we did come down. Last time we got to this area, we did come down. Last time we got to this area, we did come down. So we're at an area where the human psyche who trades these markets, because remember, we're dealing as much with technical analysis, fundamental analysis, as much as human psyche, basically how everybody feels about it, and lack of better words, is that every time price gets to this area, everybody remembers that price dropped. So what we would be looking for, because remember, like I've said before in previous videos, you want to go into trading with a plan. You want to have, if it does this, then I'm going to buy. If it does this, then I'm going to sell. You don't want to be handcuffed to one position, because then that will have you doing a lot of unnecessary stuff, opening trades, closing trades prematurely, or have you really messing up your account. So you always want to wait for the chart to tell you what to do, but you have to be able to identify these signs of the chart telling you what to do. Okay. So one thing we will look for that if we're looking for a buy, right, is that eventually we will look for an aggressive green candle up, weak push down range, and then we can get in. You can either get in at the small little range or you can get in at the weak push down if you wanted to. It's both is okay because this is about timing, but unless you can see the future, you're not going to get it exact on every trade, but you just want to be in the roundabout area that you believe price action is going to kick off and do what you believe it's going to do. Okay. Now, let's look at this from the sales standpoint. What we will look for, which almost looks like it's forming now, is a very aggressive red candle down, right? A slight pathetic pickup in price, then a little range. Now, once you see the little range or the slight pickup in price, like I stated before, you can go ahead and probably place a position because 9 times out of 10, this is going to be the area where price action takes it down. Okay. So you never want to be handcuffed to position. Go into the trade where this is what I'm going to do when I buy. This is what I'm going to do if it's sell. And also you got to have backup plans so that okay, if I'm buying, right, but my buy starts to dip below this market structure here, how much risk are you willing to take? Okay. If I am selling, but I start to go above this market structure here, how much risk am I willing to take? So you need to go in there with 4 plans, okay? First plan is if it behaves like this, I'm going to buy. Second plan is if it behaves like this, I'm going to sell. Part B to the first part of your plan is that, okay, if I decide to buy, this is the market structure I'm paying attention to, that if we go past this point, I'm closing the trade out because it's too much risk. Same thing with the sell. If you decide to sell, it's just the market structure that I'm not going to go past by because it's too much risk. Okay? So always go into each trade understanding that the opposite of which you may believe happened will happen and be prepared for both. All right, I hope that information was helpful to you guys. Happy trading.